Hello and welcome. This is Cashflow 2.0, the only podcast that walks you through the treacherous jungles of your financial statements and leads you on a path to not only overcoming some of the most costly mistakes that many new entrepreneurs make, but helps you make your money start working for you right now.
Sweet.
Join us today as Pam changes your financial future and makes finance fun.
Welcome back to the Cashflow podcast and the third in our series of See Your Cash Forecasting. We have covered off in the last two episodes on why it's important to be able to have visibility into your cash flow. Maybe a couple of reasons that might not have been just naturally obvious. And then we spent last week talking about just a simple exercise to gather up the information around your revenues or incoming cash so that we have the first of the components in place that we need to. So if you haven't had a chance to listen to those episodes, I suggest you hop back and listen to them. First one's around half an hour. Second one is only 15 minutes. And like I said in that episode, I probably had to talk longer than it'll take you to actually do what I was talking about. So I hope you go back and do that, because what we're doing in these 4 episodes is building out a tool for you to be able to have visibility into the future of your cash flows, and kind of removing a little bit of the mystique that's behind that word forecast, but yet comfortably bringing that into your vocabulary. So we're calling it the See Your Cash Forecast for entrepreneurs and small businesses, and especially for those who are of the creative type and can't stand spreadsheets because they make you crazy. Are a couple of things we need for you to do around your finances and accounting, but we're trying to extract that down into just the things you have to be doing and not all the extra stuff that we can delegate to people or that is really just work for work's sake, quite honestly. So a little bit of why I think we can do this is because the forecast concepts that I'm giving you in these episodes are actually exactly the same ones we used in both billion-dollar companies and multi-million-dollar companies and hundred-of-million-dollar companies, because the concepts are the same. And yes, forecasting can get incredibly complicated in those larger companies with tons and tons of things that they sell and a million different locations that can spend money in a whole bunch of different ways. But when we're talking smaller businesses, and I'm talking 8-figure and down here, even manufacturing type businesses, this forecasting process that I'm sharing with you over these few episodes is really, really simple to put in place. And the value that it adds is just exponential to the work it takes to put it in. So that's why I'm breaking in down the tasks into little 15-minute chunks for you, 15 minutes to half an hour tops. And if you listen to last week's episode, you will know exactly how we did that with revenue, and you won't be a little scared of what we're going to do this week, because this week's exercise is really pretty simple, and you probably, frankly, have already figured it out based on last week's assignment. And the really neat thing about this is that even if you are an entrepreneur who's new enough in your business that you haven't set up any books, so to speak, if you still have your receipts in a shoebox, or you still have keep an Excel spreadsheet that you send to your accountant once a year, even in those situations, what we're doing together here is completely possible for you to do. Sure, it would be made a lot easier if you had those things, because you wouldn't even have to take these 2 15-minute or half-hour little exceptions, but you definitely can still do these exercises. So I am actually going to frame these up, or this exercise today up, as if you don't have any bookkeeping yet. At the end, I'll touch base on a way that this is even easier if you do have your books being kept on a regular monthly basis. But let's start with the hardest it's going to absolutely be, and that is for entrepreneurs who don't have anything in place yet related to keeping track of their expenses. So here we go. Let's say that you are in the toughest of positions, and not only do you not have a system, but you haven't even kept your receipts all year. So we're going to start with the very basics. Even if you've done nothing If you've worked in your business, even if you've done nothing related to your accounting, if you've worked in your business and spent money, you're still not completely lost, and your ability to forecast isn't lost. What we're going to do is identify for me, write down on a piece of paper, where you've spent your money or what you've used to spend your money. You've used either a credit card or PayPal or a checking account or an ATM or debit card. I can't think off the top of my head of any other way that you have been able to spend money. So it's one of those four things, that simple. And in order to spend that money, you have probably a logon somewhere for your bank checking account, for your credit card, for PayPal, or for your ATM card is related to your checking account. So let's assume that's the case and you do have a logon. What you need to do is go into all those places where you have spent money, and don't worry if your personal checking account and your personal credit card are still mixed up with your business credit card. If you're doing both kinds of expenditures on one single card, don't worry about that. You're just going to, for now, go in and download statements. Now you can do that automatically and export them into Excel. If that's your game, totally fine. It's a lot more effective to play with the data there. But you can also just go print them out. Just go online or have somebody go online and print the last, let's just say 6 months of the statements for that credit card, for PayPal, or for your checking account. And then your exercise for today is very simply to go through those statements. Don't try and find receipts. Just don't go crazy. But go through those statements and try and identify which of those expenses have been related to work. And as you do them, I want you to put them into 3 categories. That's it, just 3 for now. We're not going to go crazy, okay? And the 3 categories are paying contractors or outside vendors. So this would include anything you're paying to Fiverr or an executive admin who's a contractor, or to any online hosting type service. They're not really a contractor, but kind of anything you've spent on work or computer infrastructure that is paid for or done by somebody else. So this would be kind of all of those outgoing expenses related to services and tech that support your business, okay? That's one category. The second category is travel. And here under travel include everything. Include meals and entertainment, include hotel, include airfare, train. If you've rented cars, include car rentals. If you've bought gas for the rental cars, include that. So capture anything related to travel and meals. If you've gone to an event, include the event cost in here, the ticket cost, that kind of thing, okay? And then the third category is anything you've paid yourself, just in case you've been paying yourself, which I hope you have. So you have a third category. So when you look at these, you look at all the expenses that are listed on your statement, just put a 1, 2, or a 3 next to them. 1, you've paid somebody else to do something for your business, or you've paid for tech to support your business. Put a 2 next to it if it's travel or event or meal related, and put a 3 next to it if it is paying yourself. And if there's any confusion at all, don't get all tied up in these definitions. Literally just put it in category 1. Okay? And you're going to add those expenses up for each month for those categories. And if you remember from last week, what we did was we took the information related to our revenue and we figured out what it was going to look like for the next 12 months and put those numbers into a 12-column spreadsheet. And again, there's a link to that spreadsheet, one that's pre-filled out for you with all the monthly headers in the show notes, or you may have created your own last week when we talked. So here you go. Very easy. You're going to print out statements. You're going to highlight the expenses related to your business, and you're going to put them in one of 3 categories just by marking it right there on the statement. And then either in the manual log that you're keeping, you're going to write those down month by month. The monthly total for category 1 was this, for category 2 was this, for category 3 was this. Then the next month, category 1 was this, category 2 was this, category 3 was this. and so on through all 6 of those months. Okay, that's the physical exercise for today. The rest of the exercise is just thinking, okay? And all you're going to do is spend the next 15 minutes with those numbers, and you're going to look at patterns. So the reason I put all those contracted expenses in one group is because for the most part, you're probably going to continue to spend on most of those. Not all of them, but most of them. And we're really going after a rough forecast right now. So if you've spent, let's just say, $1,500 a month for the last 6 months on all the contractors, the Fiverr type things, the executive admins, the Kajabi, the ActiveCampaign or MailChimp or whatever the things are that you have in your business. Let's say you spent $1,500 a month. You're pretty sure you're going to spend about $1,500 a month, assuming nothing else changes. So you're going to drop $1,500 a month into each of the columns of your future spreadsheet. And remember, each column is just a month. If this is September, then the first column is October, the second column is November, the third column is December, fourth column is January. Just lay that out there for 12 months. That's it. That's it. Again, I know we're oversimplifying, but we can get to more complex forecasting when the need arises. So that's the first thing you do for each category. So you're going to have a line for category 1, a line for category 2, and a line for category 3. Now, once you've done that, once you've gone and collected all the expenses and grouped them, and then put them in this spreadsheet. And again, this has probably taken longer for me to explain than it's truly going to take for you to do this. And hey, if need be, pour yourself a glass of wine, a craft beer, a tea, whatever your thing is, whatever it is that kind of calms you down and makes you feel comfortable in your own skin. Do that, because this is not a tough assignment, but the words that are used around this assignment are sometimes tough. But this is all for a see your cash forecast, and if you can just get through about a half hour of work on it, it's not that awful, even for the most creative of creatives. And we can make it fun. You can actually, there's a side benefit here is that you start to see a lot of what you spend your money on. Whenever I do this exercise for myself, I actually end up identifying savings because inevitably I have signed up for way too many things that I've never used, both training and technology. And I always, sign up with the best of intentions, and I get in the monthly programs, which I'm sure all of you do, and then I never do anything with it. So I can clean all those up whenever I go through this exercise too. So that's just a little plus side. You may find that you save yourself a little bit of money right out of the gate for this half an hour investment over a cup of tea or glass of wine. So once you've done that now, you actually have the baseline for a forecast finished. So in 3 episodes, in an hour of me jabbering on, and probably an hour of your time over the last 3 weeks, you have the baseline for a forecast. Now, the really cool thing, do me a favor and go grab the template out of the show notes, because I want you to be able to use that template just because it's already pre-set up for you, and it makes this a whole lot easier than if you're creating one by yourself. So please do go grab that template. It'll make life a lot easier for inputting those expenses. And I just want to now, because that's it, okay? You're done. We've set the baseline. But I want to lay the groundwork here for the next episode, because the next episode is the 4th in our series of 4. This one is the 3rd. And in the 4th of our series of 4, we're going to talk about and circle back to the things we covered in the very first broadcast of this series, which was why we want to have this forecast in place. And in the next episode, I'm not just going to talk about the why, but I'm going to show you how to use this thing you've just built and how to make it even more useful, and then how it answers those 4 questions that we addressed in the episode. And just as a refresher, the 4 things that we addressed in the first of this series was you definitely want to know how quickly you can pay down your debt or how soon you will need more debt. You want to give yourself some confidence. The second thing is you want to give yourself some confidence that the other shoe's not going to drop in 5 minutes on your business. You want to be able to see on paper that you can really react to anything that's going to happen in plenty of time to deal with it, which that second thing does. Third, for a business, once you get through those 2, generally you're going to start thinking about growth. So this gives you the engine you need in order to do that smartly. And that's not the right word, but do that in a smart way, because growth has everything to do, successful growth has everything to do with the timing of your cash flow. And I want to make sure that anybody who's going to jump into growth mode grows the right way and doesn't do what we call growth into bankruptcy, which can happen if you're not paying attention to the timing of these cash flows that we're building. But guess what? You've got the tool to do that now. You've already accomplished that with an hour of work. That's all it's taken. Really neat thing is, this is the only work you have to put in if you've got a staff or a bookkeeper or an accountant you can hand this off to. They can maintain this for you, and you can just use it to make the decisions we'll talk about next week. So that's the other really cool thing. In fact, you could actually have a bookkeeper or accountant do these last two steps that we've talked about on the broadcasts, these 4 sessions, and have them go back and listen to this. It'll make a ton of, they probably don't even have to listen to the first one, but if you have them listen to session 2 and session 3, today's session, they can do that legwork for you. So there's another little tip to make it even easier for you. And then finally, the 4th thing that we want to get our hands around is taxes, and really minimizing our tax burden, not because we want to cheat the government, but because this really is the biggest expense in our business is left unmanaged. You would never see this kind of expense on your profit and loss statement and not want to manage it. And that's exactly what can happen because it is sort of hidden from entrepreneurs, and we want to make sure that that doesn't happen anymore. So we're going to address all of that next week when we talk about, we pull together the work you've done in both the last segment and this segment to make this forecast a tool for you to bring you comfort and confidence and a real sense of being and feeling well taken care of because you now have a See Your Cash forecast in front of you. Again, very easy to maintain and makes all the difference in the world. And it has to me for client after client after client. I will tell you one of my 7-figure clients was in a growth mode and had ended up stalling. And the reason she had stalled was not because they didn't have money, wasn't because they didn't have a good product and the ability to scale it and grow it and replicate it, but it was because she just didn't know with any confidence if she could afford to hire the number of people she needed to hire. And this forecast that I'm working through with you is exactly what we put in place for her. And within a week of putting that in place, she was able to see, oh, I can hire the 4 people I need to hire and then some. Not only can I replicate this process once, but I can replicate it twice, because I can afford to hire 8 people. And we were able to look at the timing of the cash coming in and out related to this growth. And all of a sudden, her business just went off the charts. It went exponential in revenue and profitability. But she was able to do it without going to sleep at night going, geez, I wonder if I should have spent that money on the 4 people I had to hire. So there really is very, very practical use for this. All of the grown-up brands are using this sort of technique to figure out what they can and can't do to grow. And in the early stages of business, anybody I can get my hands on is using this to get through those first 4 problems that they're bound to encounter as entrepreneurs and take advantage of the opportunities that are also sitting out there for them. And we'll talk more about that on next week's 4th in the series of 4 about See Your Cash forecasting. You all have a great week. Thanks so much for listening. If you've liked this episode, please feel free to share it to anybody you think it might provide value for, particularly these 4 in the 4-part series on forecasting your cash flow. And if it's been helpful, I'd love for you to go put a 5-star review on iTunes for me so that we can continue to get this up and out to more and more people and start helping entrepreneurs break through that wall and be the 1 in 100 who succeeds. Let's make that more like 1 in 10 together. All right, you have a great week. Take care, and I'll talk to you next week.